Hey, what's up YouTube? Fritz Jones Investing back with another video. In today's video, we will discuss Apple's recent company earnings filed on April the 28th. If you haven't done so yet, please don't forget to like, comment, and subscribe to the channel for more stock information. If you're unfamiliar, Apple is a technology company. In fact, Apple is the largest company in the world by market cap. Apple's market cap is $2.6 trillion. In today's video, we will talk about revenue, earnings, earnings per share, beta, earnings payout ratio, and free cash flow, and I will let you guys see how much Apple stock I have. I will conclude with the verdict on Apple. Some of their major products that Apple sells includes the iPhone 13, MacBook Air and Pro lineup, as well as their Mac desktops and monitors. Also, Apple sells the Apple Watch, AirPods, and they still sell the iPod Touch, which I was unaware of. AirTags, proprietary chargers, cases, keyboards, and watch bands are sold too. Some services that Apple sells include Apple Music, Apple Arcade, Apple TV, iCloud storage, and Apple Fitness. Next, we will talk about the financials of the company. So the first factor we're going to look at today is revenue, and revenue is the income generated from all the business operations. And generally, we want to see this number rising over time. This shows that the company is more profitable and continuing to make more money. So we see that in 2004, Apple's revenue was $8.2 billion. And in 2021, the revenue was $365 billion. Now, this was despite a pandemic and also global supply chain shortages. Apple is still able to make a record amount of money. I'm interested to see how much money they'll be able to make this year. So this is Apple's quarterly earnings report, and we see that for the last 3 months, their products increased by 6% from $72.6 billion up to $77.4 billion, and their services sector increased from $16.9 billion up to $19.8 billion, which is a 17% increase. Their gross margin also increased for the last 3 months, and their operating income also increased. Net income, which is basically their earnings, increased from $23.6 billion up to $25 billion, which was a 5.8% increase. And earnings per share was $1.54. This is basically the earnings divided by the outstanding shares. The higher this number is, the more valuable the company is, and also the more that customers are willing to pay for this particular stock. So as far as their regional sales, they had increases in every area except for Japan and the rest of the Asian Pacific. There's a lot of competition come from companies like Huawei and Samsung, so Apple definitely has some opportunities there. And they had increases in their net sales of every category except for the iPad. People tend to hold on to their iPads a lot longer, so I'm not surprised to see this sector drop. One factor that I didn't mention earlier in the video is assets versus liabilities. Assets is basically everything listed on this page, their cash, their inventories, and their property, and they have a dollar amount associated with that. So Apple has $350.6 billion worth of assets, and you always want to see your assets outweigh your liabilities when you're looking at a stock. Just in case the company has to pay off some debt, the company is able to do that because of all the assets that they have. So we can see that the total liabilities was $283.2 billion. So Apple definitely has more assets than liabilities, which is a great sign if you're looking at a stock. So next we'll talk about the payout ratio, which is basically the total dividends divided by the net income. And for Apple, the payout ratio was 15% as of March 2022. Now, the lower the number is, that means that Apple has opportunities to continue to increase their dividend. If this ratio was high, let's say 90%, then Apple is at risk for having to lower their dividend because they have to pay back so many other things. So looking at Apple versus the S&P 500 since the iPhone's introduction, we can see that Apple has massively outperformed the S&P 500 by over 5,000%. Apple took 42 years to make their first $1 trillion, and then their next $1 trillion came less than 2 years later, and they actually hit $3 trillion earlier this year, but it dropped since the stock market has been crap lately. One of the reasons why I love investing in Apple is because they pay dividends and they generally increase those dividends over time. Now we can see that back in 2013, the dividend was $3.05. Now this isn't taking into account stock splits, which is going to lower the dividend amount, but it's not going to lower the percentage of dividends that are being paid out. So Apple has continued to increase those dividends time and time again. And like I said, it didn't do any kind of split adjustments. So we can see that even though it's dropping from 82 cents down to 20.5 cents, if you divide that by 4, you're still getting the same amount of math. And Apple just announced a dividend increase going from 22 cents up to 23 cents. So I love Apple also because of their stock repurchases. So in 2021, Apple spent $85.5 billion worth of stock repurchases and issued $14.5 billion in dividends. This is important because when Apple repurchases their own stock, they're decreasing the amount of available shares. So the amount that you already own if you're invested in the company increases because there's less shares. And Apple just announced in their last quarterly earnings report that they're going to have a new share buyback program of $90 billion. And they're raising their dividend by 5% from 22 cents per share to 23 cents per share. So if you're already invested in Apple, you have two more ways of making money because they increase their dividend quarterly. If you're already invested in the company, you're getting a little bit more money quarterly for doing absolutely nothing. And then your portion of stocks that you own in the company is also larger because there's less available shares of the company. So your little slice of pizza here just got a little bit bigger, as you can see in the video here. And who doesn't like a bigger slice of pizza? I mean, come on now. So I love being fully transparent with you all. So we're going to jump over to my Robinhood portfolio and take a look at Apple. And on May 3rd, we can see that Apple is worth $159.70, and it was actually up $1.52 for the day. For the past week, it was up 2.42% or $3.78. For the past month, it was down $18. I personally think that if you want to buy the company, it's at a nice discount. It was down $14 for the past 3 months. Over the past year, it was up $27 or 20.9%. And over the last 5 years, it was up $123 or 340%. So looking at their 52-week high, if we jump back to January the 3rd, we can see that the 52-week high was $182. Definitely down from those all-time highs. I personally think it's a great buying opportunity. Now, looking at my participation in the stock, we can see that I own $13,015 worth of this stock. My daily return for May the 3rd was $141, and my total return has been $4,687, or positive 56%. My average cost was $102.19. I own 81.5 shares of this company, and this company comprises around 22% of my portfolio. Looking at some of their key statistics, we can see that the market cap was $2.6 trillion. We already looked at their 52-week high. Their dividend yield is just over 0.5%, so definitely some room for growth there. And this company trades right around 100 million shares per day, so definitely a lot. Analyst recommendations are 74%. I recommend you always do your own research. And we can see that this company has been crushing their earnings per share estimates for at least the past 6 quarters. Now, looking at how I buy the stock, I try to buy anywhere between 1% and 15 to 20% per day, depending on how much free cash I have. So next we'll look at Apple's beta. Beta basically measures the stock's volatility off of a scale of 1. So the closer this number is to 1, then that means the less volatile the stock is. If the company's beta is really high, let's say 2 or 3, the company's volatility is really high, but also there's a great risk for high rewards in that company, or there's a great risk that the company could fall. So Apple's beta was 1.19, which shows that the company isn't very volatile. Now, lastly, we'll talk about free cash flow, which is basically all the cash left over after the company pays its bills, and it's the operating cash flow minus capital expenditures. And this was $69 billion at the end of March. So they're able to take a lot of this company and do stock buybacks, increase the dividend, and also put it into developmental research, such as a VR headset or possibly an Apple car. Fingers crossed. Now it's time to come up with the verdict. I want you to do your own research, but I personally think that Apple is a great company to buy into. Their revenue has been increasing year over year. Their earnings and earnings per share has been increasing and is positive. Their beta is relatively low, which shows that the company isn't volatile. Their earnings payout ratio is also relatively low, which means that they have room for growth there. And their free cash flow is high, which means that the company is doing very well from a financial standpoint, even in these desperate times. So I would love to hear your thoughts. Do you like Apple? Are you invested in the stock, and would you consider buying it? This has been Fritz Jones Investing, back with another video. I hope you enjoyed the video today, and I always remind you to invest in yourself, invest in your education, and keep getting that passive income. I hope to catch you in the next video. Have a great night. Peace out.